Okay, gross profit over sales. Yes. Time 100%. Well, the question is asking for gross profit ratio. I mean, you're right about it. So can you tell me, exactly how you're gonna come up with the answer? So just plug in the numbers in the chat, and then you tell me the option that well, since Warren has pointed that out, you cannot really pick one. So can you also give me the answer in the chat as well? So what is the number? Are you working out? Okay, all right. 38.88%. All right. So guys, do we all have agreement for the answer? 38.88%. So Royce, can you also just put all the numbers like the working in the chat as well, so people can take a look of it. 38.88. Anyone who couldn't get the 38.88. I'm going to I'm just gonna cross this out because there's nothing here. It can answer the question, and at the end the answer is really 38.88%. Oops. Where is the eraser? Okay, here. Right. Oh, I'm just gonna make it like 2 dp, so like 8 9. Yeah. Okay. All right. Um, all right. Okay. So well, Roy is not really giving us the answer. Well, but anyway, all right. I guess I'm gonna do it myself. So guys, again, go back to your formula, and then you are able to find out. All right, formula. Find the GP first. Okay. All right. Gross profit. Using sales, if sales that is A, and then cost of goods sold that's B, then A minus B, then you get the GP. Oh, okay, Haruka, thank you very much. And then wait, Michelle, what happened? And then you over sales again. So times 100, then you will get the percentage. Okay, all right, nicely. Oh oh, okay, Michelle. Okay, yes, exactly. Yeah, that's why Warren from the beginning he pointed that out. Okay, all right, he pointed that out like 15 minutes ago. Yeah, but don't worry about it, Michelle. You are right. Okay, if you are able to get 38.89, then you are absolutely right. Okay, all right. Wait, you are right. Okay, if you get this, you are right. I'm just gonna give you a tick. Okay, all right. So here, I'm not gonna, I'll amend the booklet very soon. Okay, all right. So I guess I'm gonna amend option A. So eventually it'll become 38.89. Okay, all right. So yes. So what about number 4, guys? Number 4. Number 4. I'm just gonna pick another one. Yes. What about Owen? Owen, yeah, quickly. Number 4. What have you got? Oh, Owen is saying A. Alright, what is A? Okay, question is asking, okay, other figures remain constant, which the following situation would cause a decrease in net profit. Alright, decrease in net profit ratio. Alright. Yes, so, well, definitely, okay, if the expenses were increased, definitely, okay, net profit would go down. And if you follow the formula, then definitely the percentage will go down as well. So for sure, other revenues were increased. Well, that will actually make the net profit go up. So this wrong here. Okay, cost of goods sold was decreased. Well, that will also create a bigger net profit. So that is also wrong. Sales were increased. Well, that will give you the same idea as well. So that is also wrong. Okay, all right. Oh, okay. Warren is having Wi-Fi problems. Okay, all right. Thank you, Aaron. All right. So since Aaron, you pointed that out, Aaron, can you answer the 5th question? Question number 5. Yeah, just show me the working and also, you know, the answer. Okay, Aaron is saying D. All right. Show me the working. Show me the working. Yeah, I mean, so everybody knows like how you come up with the answer of D. I think you are right about D. I just want to see like how you work that out. Okay, Aaron. Okay, all right. So 800,000 minus an unknown number because in an unknown number, I suppose that is cost of goods sold that you are referring to. All right, and over I think you put one less zero for the denominator, but don't worry. I think we get what you mean. All right. Okay. So that is well. Don't worry about it. Okay. All right. So it's all good. Okay. All right. So you are right. Okay. Okay, Aaron. That's very nice. Okay. All right. There you go. There you go. And you should be able to find $600,000 at the end based on your calculation because you just have to find out. All right. First of all right, you find out you using the equation. Equation is saying, all right, you need to find your gross profit first. Okay. You have your sales right here as your denominator, and then you just have to find out. All right. Cost of goods sold. Right, and we don't know what cost of goods sold is, so we just put an unknown number right here, and then it's basically equal to a 0.25. Right? Yeah. So if you put things like going to the right, going to the left, then you should be able to find out. All right. X is actually $600,000. Okay. All right. So there you will have your answer. Okay. All right. So number 4. That's A. I forgot to put it here. All right. But that's very good, Aaron. Okay. Thank you very much. What about number 6? Okay, number 6. Let's go with Natalie. Natalie, are you able to answer number 6? Are you there, Natalie? Hello, Natalie. Hello, hello. Number 6. Are you able to do it? Come on. I think Natalie is not here. Well, oh, Natalie, can you hear me? No. Is she taking a nap or something? Oh, that's not cool. Okay, all right. Well, since there's no response, like what can I do? All right, I'm just gonna. Oh, Natalie has left the meeting. Okay, all right, that's even better. All right, so let's go to Nanami. Are you able to answer the question? Number 6. Are you able to do it? Yes. So number 6, okay, which will increase the ROCE. So if you go to your formula, then you should be able to find some insights. Yeah. So this one here will be a little tricky because the items for ROCE is a bit more complicated. Okay. But Nanami, are you able to answer it? Okay, all right. Your answer is B. All right, the answer is B. Well, Nami, you're actually correct. You are actually correct. Right? Yeah. The answer is actually B. All right. Okay, Nami, you are right. So if you go back to the formula, all right, guys. Yeah, go back to the formula, and you should be able to find out. Okay. the formula for ROCE is, you see, wow, my computer is just lagging. Okay, all right, using net profit, okay, over capital employed. So as long as you can bump up the numerator, or you can just bump down the denominator, then you will get a bigger number. So that's how you can come up with the idea. Okay, but within the capital employed, there are many items. So you just need to make sure that you know what items that you are thinking. Okay, and within net profit, there are so many other sub items. So you just have to think about them and see how you can come up with the answer. Okay, all right. You see here, expanding sales. That's part of your net profit. So if sales are going up, then net profit will go up as well. So that can be true. Okay, all right. And increasing non-current liabilities. That is part of capital employed. So you can imagine if you are increasing the non-current liabilities, then the denominator is going to get bigger, and at the end the percentage will get smaller. So you're not gonna pick this. All right, not at all. All right. So from here you can already come up with the answer, because yeah, you look at the options. Yeah, you can definitely write 1 and 3. Okay, based on the excluding method. All right, but we're gonna go to number 3 as well, just for learning. Improving net profit ratio while total sales revenue remains unchanged. Well, that means there has to be something to do with other revenue and or other expenses, okay, which will also give you a bigger net profit, and at the end it should give you a bigger ROCE. Okay, all right, so that's why the answer is 1 and 3. Okay, all right, yeah, any questions? Okay, all right, so let's go to number 7. All right, number 7. What about okay, Michelle? Yeah, are you able to tell me the answer for number 7? Michelle. Oh, hi. B. Okay, Michelle is saying B. B for number 7. Do we have agreement on that? Number 7 is B. The answer for number 7 is B. Do we all have agreement on that? Oh, disconnected, but I heard you call her name. Yes. Okay. All right. Okay. Someone got a different answer. Oh, well, why, Michelle? Why don't you show us the working, for 2000 and X2, so we can take a look of your working, so we can find out. Oh, okay. Okay. All right. Cool. Okay, Michelle. Yeah. Oren. Maybe you're right about her. Okay. Yeah, because like from the beginning, I just pointed that out. All right. You just forget about the sales return stuff here. Okay, just use the the net sales as your sales. If you're using this here, then you're gonna screw up the answer. Well, even though when you get to the exam, you won't see something like a sales return. Don't worry about it. But here, that's why I had to mention this first to you guys. Otherwise, you guys will use the first one. Okay. But anyway, if you're using the net sales here, so it should be A. Yes, exactly. Should be A. All right. The answer should be A right here. Okay. All right. Yes. And looking at the gross profit ratio. So here this is for X2. This is for X3, right? Gross profit ratio. We know how to calculate it. So you find this number here. Nice. And then you get gross profit here. All right. So as long as you have the two numbers here, I'm just gonna circle them, and you can find out, the answer already. Okay. All right. So you have a gross profit for X2 right here, 7,000, and over the sales, which is 15,000. Okay. All right. Yeah. You multiply it by 100, then you will get probably 47%. Okay, all right, yeah, which is A. Okay, all right, and for X3, you just have to use the same method. Okay, all right, are we all good? Yes. So far, so good. Okay, all right, that's nice. So now let's move on to question 8. Okay, before I give you guys a break, and then we will keep going and finish the rest of the questions. Yeah, so that's what we're gonna do for today. All right, it's gonna be all practice. All right, for today. All right, nothing else, just practice. Yes. So for number 8, so first of all, I would like you guys to help me identify, the account for each of the items here. All right, I'm just gonna keep asking people. So that's why today definitely everybody you are able to answer the question at least for once. Okay, all right. So my question right now is identify the account for items below. Items below. All right, let's try to do it bit by bit. All right, okay, yeah. So that's gonna be quite a lot of answering. So let's say, is Natalie back? Natalie, are you back? Oh, nope, left the chat again. Okay, all right. Anyway, Melanie, can you tell me, for cash, where would you put it? How would you identify cash as an account? So when you're working on like accounting, okay, when you see cash, yeah, current asset. Okay, that's very good. Yeah, current asset for cash. I'm just gonna put CA over here. Yeah, nice work. All right. So I'm just gonna keep asking people. Megan. All right. What about motor vehicles? Where would you put it? Megan. Are you there? Hello. Yes. So for motor vehicles, where would you put it? Okay. All right. Yes, you are absolutely right. All right. Because it's a very durable asset. All right. Okay. Yeah, it will last definitely more than a year. All right. So definitely is a non-current asset. Okay. All right. But what about Marcus? Yeah, still remember bank overdraft? Like where would you put bank overdraft? What kind of? Okay, all right, that's very good. Yeah. Okay, Marcus, that's very nice. You're gonna put it as current liability, yeah, for sure. Okay, all right, because very soon you will have to repay what you have withdrawn extra from your bank account. Okay, so this is like a kind of debt, like a short-term debt. All right, okay. Yes. Okay, but what about Kenny? Kenny, are you able to tell me loan to you know Delhi repay in 2009. So what kind of account would you put it into? Oh, asset. Okay, is a loan, but it's a loan. How come? How come, Kenny? You would say that's an asset? So loan to. Well, I mean. Oh, okay, all right. I think Kenny. Is because you when you look at the name here, it says it's us lending loan to other companies, and that's why you said is an asset. Yes. I mean, you're right about it. Yeah, you are right about it. Okay. All right. But here, well, let me. Yeah. So you see here, this is how we spot out like mistakes and stuff. Okay. And apparently, I made a mistake right here. Okay. It should be it should be from. Okay. So guys, sorry about that, and let's change it. Okay, loan from. Okay, loan from. All right. So if that is the case, can you tell me what kind of account then would you put it into? If I just change it from to to from. Okay, what kind of liabilities? Okay, all right. Yeah, thank you very much. Okay, all right. Yes, there you go. We just have to keep going, keep going, guys. All right. Yes. All right. So that's where you have your NCL. And well, let's move on. Katie, what about trade payables? Trade payables. Where would you put it? Katie, are you? Oh, current assets. Are you sure, Katie? Can you explain what trade payables are? Yeah, what are trade payables, Katie? Can you try to explain it very quickly? Oh, okay, all right. But I just want you to define it very quickly for me. Can you interpret what that is? Money that you have to pay people back. Uh, yeah, from. Oh, okay, all right. Yes, that's even better. All right, the second answer that you have, that is the best one because it will complete your entire answer. Okay, money that you have to pay people back from credit purchase. Okay, it's always about you buying, inventory supply. All right, but you're not paying cash. You're gonna pay them later, so you are basically owing people money, and you're gonna repay it soon. And that is why you're gonna repay it usually, normally, within a year, and that is going to be a current liability. Okay, all right, yeah. Okay, all right. Michelle is saying, okay, all right, no worries. Yes. So we're just gonna keep going. All right. What about Julius here? Yeah, I mean Julius, I know. Because you just started the second term. Okay. Without the prior knowledge from the first. But I just want to see if you are able to answer this question based on the revision maybe that you have done in the past. Okay, all right. So for trade receivables, what account would you put it into? Yes. Okay. Yeah. I mean, you can imagine, Julius. There will be quite a lot of things you need to catch up. Yeah. But are you able to tell me the answer, or not yet? Asset. Yeah, you're right. But what kind of asset? Uh, oh, that's actually right. But Julius, can you tell me the definition of trade receivables? How would you interpret trade receivables? So you're right. Yeah, it's a current asset. But I wanna hear. Yeah, I wanna see how you interpret that. Oh, okay, okay, yeah, I like the answer. Okay, I like how you interpret, trade receivables. Okay, it's basically when you're selling goods, you don't receive cash at the moment because people they had credit purchase. Okay, so you will receive your money later. Okay, and therefore people they're kind of owing you money this time. All right, and you will receive the money very soon. Okay, all right. So that's why trade receivables they will be converted into cash very quickly. So that's the official definition for current asset. All right. Okay. That's very good, Julius. Okay. Thank you. What about Jasmine? Jasmine, what about office equipment? Okay, all right, yeah, I don't think we need to explain for that. Okay, office equipment, definitely that's a non-current asset. Okay, that's very good. And then owner's equity is just owner's equity. So I mean, I'm just gonna put it there because it's the answer already. Okay, all right. All right. So and then you have all right, you have three items here. Isabella, can you tell me for these three items, in which statement that we can see them? Isabella, are you there? So the three items that I just you know drew a bracket. So in which statement, financial statement, we can see the items there. Statement of financial possession from Haley. Really? Well, I mean, these are okay. These are right, Haley. Yeah. But not the three at the bottom. So which statement is it? Are you there, Isabella? Hello. Oh, okay. All right. Wow. I mean, it's time to go back. All right, to what we have learned. Okay. So here's statement of financial possession. Yeah. See, this is what we should always do. Yeah, we always go back, and then make some digestion because we have learned so much. So if you go back to right here, we always try to understand three financial statements, and then there's another one we call an income statement. All right, and that is how we calculate, gross profit, net profit, and even retained profit. Okay, all right. So here is the answer. All right, this is your income statement. Income statement. Yep. There's no space for me to write it, but you know what I'm trying to say. Okay. All right. So once we have got all the accounts identified, then we can just simply calculate ROCE for this question here. All right. And well, let me just tell you very quickly, how we can answer the question. Okay. All right. So first of all, you go back to your equation. Equation is over here. All right, ROCE, net profit over capital employed. Okay, all right. So you just have to find out the net profit, right? Okay, net profit. When you look at sales minus cost of goods sold, and then you minus operating expenses, then it will give you the net profit. Yeah. Okay. So you do A. Yeah, I'm just gonna put letters. Okay. A minus B minus C. That will give you a net profit. Okay, that's how you get net profit. That's nice. Okay, so now we just have to find out the capital employed. All right, capital employed is basically using your owner's equity plus all the non-current liabilities. Okay, all right. So you just have to go find the owner's equity. So right here you have $24,000. Right? Yeah, right here. Okay. We all good? Yes. So $24,000. Okay. All right. And then let's see if we have non-current liabilities. Oh, right here. Yeah, based on the error that we have corrected, then you do have a non-current liability. Right here, 20,000. All right, from here. And yeah, some people you may be wondering whether or not I should put the net profit in the denominator as well. Okay. In this question, we are not going to do it because normally owner's equity. Okay, you will find retained profit as well. Okay, retained profit because that is the kind of profit like after taxes and dividends. That's the remaining part that you will get. All right, the one at the bottom. And then for that profit, the owners usually they will use it for reinvestment. Okay, and that will fulfill the definition of capital employed. Okay, but in this case, because we only have the net profit with us, we don't have any other figures, like extra information provided, so we are not gonna use it. Okay, all right, we are not gonna use NP putting it here. Okay, all right. So with that being said, which is the correct answer you guys have got? Have you done your calculation based on this? Okay, Warren is saying B. Okay, yeah, B is correct if you're using this, formula here. So B is correct. Okay, all right. So there you go. Okay. Yes, right, because NP should be equal to 7100. Yeah, something like that. Okay, all right. Yeah, right. So if you have done the calculation, then you will get a 16.14, I guess.